Hey guys, welcome to another episode of Venture with Joe and Cody. I do it every time now. Another episode. I cannot talk.
It's your thing. I like it.
I'm just gonna go slower. Another episode of Venture with Joe and Cody. I am Joe Skipper, owner of Skipper Realty Group. My buddy over here, Cody with Residential Mortgage. How's it going?
What's up? I'm doing good.
Good,
You?
man. Yeah, things going good in your life. Everything fine?
Yeah, I think
Good.
so. I mean,
Okay.
things can always be better, but I also
Yeah.
feel like what I would complain about is probably what everybody else would complain about. So I think I'm doing good.
Yeah, for sure.
Yeah.
Well, today I just wanted to jump right in because I found some like top questions that get asked of lenders in real estate, and not necessarily top normal questions. Some are a little funkier and some are a little
Yeah.
weird, but some are legit and might need to be answered. So I think we should get into that.
I think so. There's a lot of them that I think are very normal questions.
Yeah, for sure. So I'm just gonna get started with one for you.
Okay, you want to just go back and forth here?
Yeah, let's do it.
All right, let's do it.
So can I get a mortgage if I just started my job yesterday?
Yes, you can.
Okay, tell me about it.
But there will be a little asterisk there.
Yeah.
A lot of it really comes down to how you are paid. If you're salary, if you're hourly, commission, bonus. What lenders are looking for is stability. So if there is consistency with what you have previously been doing to what you're doing now, I mean, the easiest, I would say safest bet is if you are going from whatever type of pay to salary. Salary is beautiful when it comes to calculating income because it doesn't matter. Your hours can vary. It's guaranteed that you're going to make that much money each month. So that is like as simple as it gets. If you went from a standard 40-hour a week job when you didn't get overtime or bonus or commission or anything, and then you went into, say, a sales position where you were making just a small base and the majority of your income was commission, then no. We're going to have to qualify you based on what is consistent. So we're going to qualify you on your base income, which, probably is not going to get you what you're looking for. But in general, if your income is stable, even though you've just moved, I mean, honestly, we can close loans, and this isn't just us, but we can close loans where you change jobs, even like post closing, as long as we have all the information. And in that case, we'd have to get like a pay stub after closing just to verify. But we have to really confirm everything with the employer. But yeah, it's more flexible than you would think. Where people tend to get in trouble is reduced hours or changing income to something that's less stable.
Yeah, for sure.
Yeah.
Yeah, that's important though, because I think that, a lot of people will say like, oh, well, I got a new position and it's a better position. I get paid more, but it's now based on commission or based on something like your salary.
Yeah.
Steady at 100K or something like that. Then you're like, well, I'm going to make a 200K, but it's a different format. It's bonuses at the end of the year and things like that. And that is counterintuitive to what I think the average person thinks is that, oh, well, I'm making 200K. I should be fine. It's not a big deal if I change that midway through a loan or right at the pre-approval, but it does make a difference, correct?
It does, yeah. Because what they're going to want to see is at that point, like a 1-year bare minimum of history of what that looks like, because it's so variable. Yeah, you can make up to 200 grand, but we need to see a couple years worth of history that you can actually do that. Like if you went from say a sales type of position, and then you changed into a new sales position, that's where that 1-year mark is going to be. If you went like from scratch to sales, they're going to want a 2-year history. But it's like, if you've got a track record of sales, they're going to want to see your track record with the new company just to verify that this is actually what you do make throughout the year. And it's not just like one big sale here and there, or it's seasonal or whatever. So
that's interesting though. Like, okay, if you had so say, okay, where was I going with this? So you can say I make 100K on salary. I'm, in the pre-approval process or midway through the transaction, I get promoted to make a $200,000 a year job, but it's on bonuses and commission or whatever it is. Can you still get approved in the more stable rate? Like, can you get approved at the 100K?
Yeah.
Okay, so you don't have to change anything. If everything's going fine and you like that price that you're at, or the house that you can afford at the 100K, even if you do get a little more weird with your job, it's fine.
It's fine.
Okay.
Yep.
Okay.
And with that type of structure, say it was somebody where they were getting I mean, the hard part is when it comes to the variable income, if we can get the employer to say this number is guaranteed,
Yeah.
then we can use it. But
Okay.
they rarely ever want to say it unless
For
it's
sure.
like, yes, you get a $50,000 bonus each year, regardless of anything.
Yeah.
We could count that essentially right away because we know that it's guaranteed to happen. But most employers don't want to say that because a lot of bonuses and commission are percentage based
For
or,
sure.
how the company did or how they did. So it's nobody
Okay.
wants to say the big G word.
Yeah. No, that makes sense. Okay. Cool.
Yeah.
Cool.
Yeah. All right. I got one for you here. Will the sellers leave the furniture, the hot tub, and their cat?
That's kind of a yes and no. Well, technically it's a no. Like everything affixed to the home has to stay. Things I'm thinking, what are we thinking? Like you can take your curtains, you can take your, but any like shelving or anything like that that's affixed to the house, cabinetry, the bathroom cabinets, those sort of things. The things that you mentioned, what were they? The
Furniture, hot tub, and a
furniture
cat.
is not affixed. It can be and go. Hot tub is not technically affixed. People can say that kind of gets a little technical, and the cat obviously goes.
Yeah.
But
Can you ask for the cat?
it's important to, yes, you can ask for the world. And that's what I think
Okay.
people don't know. And this is a great question because it can be asked. If you like the furniture, if you like the couch, you can put it in the offer and say, we're going to offer you X and we want your couch and we want your hot tub and we want your cat. You can ask for whatever you want. The seller doesn't have to give it. But you can ask for the world. You can ask for the house fully furnished if you want. With a child, you could have their firstborn, and be like, you're gonna ask for that one.
Have you ever had somebody ask for an animal?
No, not an animal.
I wonder if that's asked for like a goat or something,
It would
or
be
like a
interesting.
random.
It would be interesting because it would be something you bring to the seller, and if the seller's like, "Yeah, I don't care," keep the cat.
Right.
We've been wanting to get rid of that stupid thing forever. So
Right.
yeah, so I guess you could. I always tell the buyers, it just ask for anything. Ask for it. All they can say is no. They are required to leave certain things, and that's where you kind of get a little more nitpicky. Like they can't just take their cabinets because they like their cabinets,
Yeah.
unless it's included in the sales agreement. So everything has to be in writing in the sales agreement what you can and can't take.
Okay.
But there are.
I would guess.
Yeah.
I would guess that hot tubs probably get left more often than taken.
Yeah. Some people, I have had a couple that are like, we need the hot tub, we want the hot tub, and we want to move it. But yeah, for the most part, they're just kind of assumed that they're in. But again, like write it in the contract if you really want it. Write it in the contract because they could take it. And yeah, we've had people you could take the not to get too nerdy about all this stuff, but like ranges, like everyone assumes a range is like in built in. It's part of it. But if it is movable, like if it is just an insert range, you technically can take it.
Wow.
It's not one that you want to battle with, but as a buyer and as a seller, just be aware there's those weird gray areas where everyone assumes a range is built in, but there are a lot of ranges that you just pull out and you can take with you, just like a washing machine, which you can take with you. So just be careful with that stuff because
that happened to us, not the range, but the refrigerator.
Yeah.
We didn't know to ask for it.
Yep.
And we weren't
not come.
They did. No, we show up to the house, like get the keys, show up to the house. And we're like, where's the fridge at? And then look through everything. And it was not included in the,
that sucks,
in the contract. And so like point in case,
I know.
I definitely don't want to assume.
Yeah. I make it a point to just like, even if sellers or buyers are like, hey, we're bringing our own stuff. I'm like, do you just want to sell this stuff? Because I'm just going to include it in the contract because it's just there and it's something you can make a few $100 each one, and then it just makes it clear. And I just make it a habit of just putting all kitchen appliances, so that normally works.
And everybody
out.
Needs a garage fridge.
Exactly.
Like, come on.
Exactly. Okie doke. Okay, this is a good one. I'm not big into this, but can I use Bitcoin for a down payment? I don't know much about Bitcoin. I know, it's can be good, but yeah, I can use it for a down payment.
That's kind of that is a yes and no.
Okay.
What you would have to do is you would have to sell the Bitcoin.
Okay.
And then it would more than likely have to be seasoned for 2 months because Bitcoin is still not recognized from the mortgage side as like an asset.
Okay.
So I've never ran into this, but my guess would be potentially that they would say, like, if they just saw the transfer or the sale from your Bitcoin account and then it went into your bank account and it said, Bitcoin or whatever it is.
Yeah.
I don't know how they would react to that. If they would say, well, that is not a verifiable source that But you can sell pretty much anything and use that as down payment. So I don't really know on that one. I know you couldn't just use the actual Bitcoin and say like, hey, I'll give you, this many shares of Bitcoin, which translates to the same amount. It would have to be cashed out.
Do you think lenders will go to Bitcoin? Like have an option for that? Or do you think it's still too early to tell if they're going to recognize that? To where someone could say, hey, I'll give you X amount of Bitcoin.
Yeah.
Or a partial thing of Bitcoin to cover this.
I don't think they will. And only just because I feel like it would be the same thing, at least in my little uneducated brain, the same thing as like giving stocks for payment. Like I don't think that there realistically would be or should be an issue if it was like, hey, I'm just going to sell some of my Bitcoin for this.
Sure, for sure.
Similar to what people do for stocks and retirement stuff. So
but using it as like a cash thing is like probably going to be.
I don't think that they will ever get to that point. Maybe if you get like some private lenders that are, they would take that risk of, what that money could potentially do. But I don't think that it'll get to that level with all the main normal lending outlets.
I see.
Good question as it continues to grow.
I know.
Here you go. Can I plant weed in the backyard right after I buy?
Nice. Well, for you weed smokers, then yes, you can. There are rules, though. They're all rules. Rules? Not rural. Rules with
rules.
So it's just, I'm not going to, I'll give you kind of generic stuff. I'm not going to be your lawyer and tell you what you can and can't do, but Oregon does allow a certain amount of plants total for each household. You obviously have to be 21 and over. The plants have to be out of public view. So there's different rules. There's going to be HOAs that don't allow it. So it's not as easy as buy and just plant your garden of marijuana, but Oregon does allow a certain amount of plants to be grown personally at your house.
Okay. Well, now, is that the same? Obviously, that was kind of just a funny one, but is there restrictions for planting a garden anywhere you want in your yard or planting trees? That's all just going to kind of come down to?
It'll come to the individual home in the individual neighborhood. Most of those things are limited by an HOA. Then it gets out to if you're more of a rural area or acreage that doesn't have an HOA, then you're kind of limited just by the county or the city's rules of what you can and can't do. So all of it, everyone has a rule for every single house. They just get more strict as you get more into the city and into the HOAs of what you can and can't put in your yard. So
okay,
yeah, you know that you're out in the boonies, right? You're
out in the boonies, yeah. Yeah, we
compared to me,
cut whatever we want.
Yeah, but you've got to follow what county. You have to stay within a county guideline, which is probably pretty loose for the most part. Besides doing anything crazy with big timber, right?
Yeah. I don't actually know. I kind of just I'm more of like a do it and wait to get my hands slapped type of person.
That's a lot of rural people with acreage are like, I'll just do it and see what happens. Like, the HOA people are the ones that are going to get you in the neighborhoods. That's what's going to hurt you. So.
Right. Yeah. Well, it's funny that, this conversation, because I feel like for a lot of people, it's just assumed like once you buy the house, you can kind of do whatever you want with it. But I also get the flip side people too, that are like, I don't know what I can. I've never owned. I don't really know. I had one guy ask me before they were like, it was like a day or two before they closed. They're like, what would happen if we just didn't like the place anymore? What do we do? And I was like, well, I thought that was just kind of like common knowledge, but you realize, well, you'd have to sell it. And it's not just like a give your notice. I want to get out of here.
Return. Yeah. For sure.
Yeah,
for sure. Okay. Well, do lenders care if I get a big Venmo payment from a friend?
No, but yes, a lot of these are kind of yes and no's.
These are cop outs for you. You just keep saying no and yes, and then
I know. Well, it depends.
I know every loan is different. Every person's different.
Yeah.
So
it depends on what the person's view of large is, because in our world, a large deposit is considered something 25% or more than what your monthly income is. So if you were getting something that was like, say, 10 grand, they're going to want to know where that came from. You can still use it. We just have to document where it came from. So if it was, the sale of something, we would get like some form of, like, you sold a car, bill of sale, something showing that you owned that car. If it was just repayment of something, we would just need to get like we'd need to get something from that individual that says what the repayment was for. If it was, say, $2,000 and you made $1,000, then it's not considered a large deposit. So we're not going to care because it's not considered large because their income is larger than that. It does vary individual to individual, but if it's less than 25% of your monthly income, then it's not going to be an issue.
Yeah. Okay, cool.
Yeah. I'm going to skip one. Can I pay for the house in cash, but literally in cash, like in bags?
That may be a lender thing. I don't like, that's a great question. Like if they had 100K in a duffel bag.
Yeah.
Obviously we don't handle the transaction. It would be more of the title company.
Title. Yeah.
And so it would be you'd probably have to do, title probably isn't going to take 500K in cash.
Yeah.
Because it's not going to be a lender, involved. It's not going to be really the real estate agent involved besides the contractual stuff. So the title company is the one that normally handles mortgage payment, the mortgage transition and all that sort of stuff. So it would probably come down to the title company, which I almost guarantee would say we're not taking 500K in cash.
Yeah.
Or $1 million in cash into the title company right now. So they're probably going to ask for some sort of cashier's check or something like that. So you'll probably have to deposit it into a bank and get a cashier's check for it. That's my guess, I think.
Yeah. That'd be pretty awesome though. Just to show up with a bag of cash.
It would be cool. It would be cool. But I just don't see a title company being like, "Oh yeah, it looks all good. Let's count this in the back room and give you the deal." So I just don't think that's gonna happen. So
right. I don't think they're prepared for that kind of stuff.
Yeah, that's that. Did that answer it okay?
It did. I think so. We don't know.
This one, I don't even know. This is almost so dumb. I'm just going to tell you it, and you can just say, "Don't ask that question." Can my dog be a co-signer since I don't have good credit?
That's one that I can confirm is a no.
Yes. Okay. Okay. Let me see. If I buy a house, do I have to tell you about my student loans?
No, you don't have to, but we will find out.
Yeah. You guys do a check on that stuff.
We do. Yeah. So it'll show up on your credit report unless you just took out a student loan the day before we talked and we pulled credit and it doesn't show on there. Usually when something new pops up on your credit, there is an alert that we get that would show up. So you're always best to just explain everything to the loan officer because the last thing you want is to show up, a week before closing and then we get pinged with, "Hey, we need to update the credit report because there's this new thing on there."
Yeah.
So it's never a good idea to withhold the information. I understand why people tend to want to because they know it's probably going to hurt their situation. But yeah, there's not a lot that doesn't get found out throughout all the verifications and credit checks and everything that happens. Like we have to get so much documentation that it's really hard to find or to hide something.
Yeah. Especially like formal debt. It's like, it's all in record. It's all, maybe if you owe a bookie, maybe.
Yeah, no, that wouldn't get found out.
That wouldn't get found out.
If you owed a bookie,
there are
if
ways
you had
you can hide something.
Yeah, if you had a private note with someone that was not ever filed.
Yeah.
We wouldn't know about that.
But for the most part, your student loans are getting flagged right away.
Right.
Don't try to hide that.
Right. Yeah.
Okay,
so here we go. Do I really need to mow the lawn before I list, or will buyers just see the potential?
No, buyers do not see potential in a trashy lawn.
No?
Like that's another can dog be my credit? It's like on my cosigner.
Yeah.
It's not a dumb question, but it's like you have to show your house, especially in this market, in its best way. So I like the idea of like, hey, there's potential here, but that limits your pool of buyers to people that want to see potential versus want to see a home they want to live in. So
yeah, I would imagine that's probably for the people that their house is just a wreck and they're like, do I really need to do all this stuff?
Sometimes you just have to price it that way. But it's funny because the house Christina and I live in, we went to a bunch of new homes, new construction homes, nicer homes all through the day. And the last home we came on was the home we ended up living in. The for sale sign was hanging down, like almost fallen over because it'd been on the market forever. The house did not look good. It was trash. It had been a rental with college kids in it. And so there was curtains hanging off the curtains, not even hanging straight, dirty carpets, whatever. And Christina and I were like, yep, we see the potential.
This is the one.
Like we saw we had seen beautiful homes and we walked in this and we're like, this is it. This is the one. So you can find buyers like that, but we were rare. Like
sure.
We're more rare than most. So
yeah. I don't think there's a lot of people that actually want to take on the project. Of that. I think it's just like, that's too much. Moving's already a lot. Let's
for sure
move on. Okay. I'm going to give you another one here since that one was kind of here's a good one. You probably might run into this one frequently right now. Will the seller be mad if I lowball by K on my offer.
Yeah, there's always the risk the seller will be mad. But I would say now more than ever is make an offer. I think when times were super good for sellers, they would be super mad and be insulted and they'd move on.
Yeah,
200K is a lot of a drop depending on the price of the home. You know, like a
sure.
$500,000 home, you're going 200K under
Yeah,
is insulting. A $2 million home with 200K a lower, you know, been on the market a long time, maybe not as insulting. Uh, yeah, I don't think it's not a bad question. I'm not afraid as a buyer's agent to lowball and just see. And it's up to your agent to kind of articulate why you're doing that and articulate your motives and things like that. And that kind of helps quell some of the, I think, drama that comes with it than an agent that just sends in an offer with no explanation of why they're offering what they're offering. So we like to
yeah,
explain why and, you know, their thoughts on the home and what they, you know, that sort of stuff to kind of calm any
yeah,
freakouts from that.
sure. Have you ran into any situations where somebody has wanted to go in low and it did feel like disrespectful from your side and you're like, maybe let's not go that far, and there was kind of like a little back and forth on
Yeah.
you feeling like, I
Yeah.
don't really want to present this offer, but you're firm on wanting to present this? Like, does it
Yeah.
get to a point where it's sticky, or do they listen and kind of trust what your
No,
gut
I think
says?
that like how you have to explain it is, you know, if it has a valid reason rather than just like I just want to be a jerk and just go low. Like if they're like, hey, this house has XYZ wrong with it. We're gonna have to fix this. We're gonna have to we saw this, we saw all these issues. Yes, the home values in around the area are the price they're asking, but their home is different because of this. Yeah, I explain that all the time. Say, look, you're not wrong at at this price. You're totally not wrong offering it 50K lower. 100K might be a little insulting. I'm happy to do it if you want to do it.
Hmm.
But I think you're probably not going to get anywhere with it. And normally that's what happens is they either ignore it completely or they counter back at more of a reasonable
Yeah,
price. So yeah, I haven't had
sure.
too many buyers. There are a couple investor clients that I've had that are like, no, let's just try it. You know, I don't care
Yeah,
about being told no.
sure.
Which for me, it's totally fine. I'm just representing them. So I still try to soften the blow in an email or a call.
Huh. Yeah.
But yeah,
Heads up.
it normally hasn't been an issue. But my job is to get the buyers the best deal, so I like, you know,
Sure.
are working with that stuff.
Yeah. I don't know if there was like a threshold where you're like,
No,
ooh,
no, I've had a couple people, and they do end up listening when they're ridiculous. I'm like, that's just they're not even going to respond to this, and
yeah,
they're like, okay, let's not do that.
sure. We'll increase it by 1,000.
Yeah. Well, what? Oh, I have had that actually. I had a buyer or seller get so insulted that they actually counter offered with a higher price than the listing price.
Oh, no way.
It was awesome because
You're
it was
like, ooh, this
insulting
would
and
be
it
a,
was a hot time in the
yeah,
market for sellers. And so it was like kind of a slap to the face of like, we're not only are we going to say no, we're going to
yeah.
offer more. Like we're
We're
going to
charging you more
Yeah.
now.
So yeah, it didn't work out, but it was
Yeah.
still awesome. So.
Oh, that's great.
Okay. What if I apply for a credit card during escrow, which to anyone who doesn't know escrow, it's when you're under contract with a home. Will it really matter?
Again, yes and no. It depends. If your credit is good, it's probably not going to make much of a difference. We're going to get notified of that. So regardless, we're going to find out. It's really just going to depend on what your credit is and did you max that thing out right away? Because the main problem that ends up happening is your credit's going to get dinged a few points by opening up a new account. But again, if your credit's good, then it's not going to really make much of a difference for you. And if you just opened it up and you haven't used it, no harm, no foul. But what like the worst case scenario would be you don't have great credit. So now it drops you a little bit,
Below
but
that.
a little bit means a lot when you're teetering on qualifying and not qualifying. And if you max it out or fill that thing up 75% of the way, now your debt to income, like now your credit's going to be even worse because your balance is that much higher. So now your credit scores went down more and your debt to income just went up because now we have to count that additional debt. So if you're in a good shape and you just open up a card because you wanted to or you didn't think about it, it's probably not going to affect you at all. But there are those worst case scenarios where that does happen. I haven't had that happen, but I did work with a client who had that happen with the lender that she was working with prior to talking to me, where it was like the 11th hour and it all, she got a new card and used it and more or less maxed it out, and it totally jacked her up. It's new construction and she couldn't buy the house because it just like it dropped her credit like 40 points and she was already kind of on that lower level and it was a whole mess. Like she was a wreck over it, but
Yeah. Well, I think that's the biggest thing too, is that it may not hurt you, but it flags it in your system.
Yeah.
It's not like, oh, they have good credit, Cody just ignores it.
Yeah.
Doesn't it like
Yeah.
ping to like now it has to kind of underwriters have to look at it or things like that. Like it's not something you want to do. Like even if you have great credit, it's just not it's an unnecessary stress that you have to go through and that the lender may have to stall close depending on how long it
Hmm.
takes to get back into this. And it just,
Yeah.
it's not recommended.
It's no bueno.
No.
And the worst part too is we get the notification from the underwriter. So it's already been seen by the underwriter that there is this new trade line that's
Yeah.
on there. And then it's up to us to go out and make sure we get that on there. So
Yeah.
it's not as if even it can be like, well, maybe they won't notice. The
Yeah.
underwriter that's
They
working
will
on your
notice.
file is the one who gets notified.
And it can really stall things. At the very least, it could stall things that you
Yeah.
want to close on a certain time and you did this a week before close, even if you have great credit, nothing's a big deal. It could stall closing, to make everything work right. So don't do it.
Yes, don't do it. And that kind of falls back on us as just like walking people through what seems
beginning.
like very basic things.
Yeah.
It's just those reminders of, hey, don't do this, don't do that.
For sure.
We don't get notified when you're buying things. Like if you're paying cash or using your debit card or even using your normal credit card, like we're not as involved as a lot of people think we are, but we are involved in what we need to document.
Yeah. Okie doke. Okie doke.
All right, what do we got here? Do I have to disclose if my neighbor is a jerk? Did I say that one?
No, you don't, unfortunately. Which is always there's two parts to this. Is it's so funny because you and I have talked about this before. Is a house you spend the least amount of time with one of the largest purchases you ever are going to make when you buy a house. You go in a house for a half hour. Maybe if you love it, you're in there for an hour. Like, and then you
Isn't that
buy
crazy?
it. You're like, I'm going to pay $1 million on this house. I've been in it for 45 minutes. And you spend more time looking at a car, like test driving it, looking around, looking at different colors, looking at different things. And anyways, what gets me is that, again, not only the home, but you don't know your neighbors. You don't know your community. You don't know any, like, you're buying into this huge thing with neighbors that you will never have a clue until you actually live in the home.
Sure.
But as to a legal thing, no, you don't have to say that your neighbor's a jerk. It's only like, I forgot what the terminology is. It's like health and safety sort of things. And seller's disclosures will tell you, you have to disclose certain material things and that sort of stuff. But neighbor is a jerk. It would be cool as a buyer to know that, but as a seller, it sucks because you're like, I can't control that. Now I got to sell my house for less because no one wants to live in it because my guy's a jerk. So
and nobody warned me. Why do I have to warn them?
For sure. No one let me know about it. Okay, let's go one more and then we'll call it good. Let me see if I can get a good one here. Some of these are so dumb. Can I just not tell you about the bankruptcy I had years ago? And it was years ago. So do I have to tell you?
No, but it's similar to the student loan thing. You don't have to tell me
about it. Yeah.
But it shows up on credit reports.
Okay.
What's been filed in the bankruptcy and when it was discharged and everything. So you can hide it, but it won't.
Well, let me ask you one or two more then, since these are quick. If I get a co-signer, do they have to live with me?
Nope.
Okay.
Nope. But for a non-occupying co-signer, that typically is more or less required to be a family member. As opposed to if they were occupying the property with you, it doesn't have to be a family member.
Okay.
So they want close ties for somebody that's non-occupying co-signer.
Okay. And finally, if I pay off all my debt, and this is a good one, if I pay off all my debt today with a credit card, will that help?
Yes. Wait, if you pay off all your debt with a credit card?
A good, like the question actually spurred two questions with me because it was read. So if you pay all of your debt, your other debt, say you have $25K in debt, just random whatever debt, and you just take one credit card and pay all that debt off with that one credit card. Does it change? Does the debt change?
Yes, it will.
In a good way or a bad way?
Yeah, that's the question. So my guess is that it would probably actually help your debt to income, potentially, because we have to count whatever the minimum payment is for each of those trade lines. Okay. So say your credit card payment now is $500 a month because you just threw 25 grand on there. That might be significantly cheaper than what all the other
minimum
payments were for each month for all those. Okay. So yeah, I mean, realistically, if you had that as an option, you're probably going to be better off unless you max out your credit card and then you close out all these accounts. Then your credit's probably going to take a nosedive. And for anybody that's listening that is credit interested, whenever you close out a card, whenever you pay off a card and you have no intentions of using it anymore, Don't close it out. Keep it open, use it periodically. If it's an installment loan, like a car loan or something, there's obviously nothing that you can do with that. But if you have the choice of keeping a trade line open, there's a lot of weight that's carried with how long you've had accounts open. Even if you just use it just enough to keep it from going inactive and you've had it for 10 years, keep that thing because that's going to just continue to build your credit.
Yeah, I think that's a common misconception is a lot of people like, I got to pay off my credit card debt, and they pay it off and close out their account.
And close it out. Yeah.
And then it's oddly not smart. I get what they're doing, but
yeah,
I had to learn the hard way too of that same thing. It's like, you have to keep it going. Just cut the credit card up if you have to, but like, just leave it open.
Yeah. Use it for the most minimum things you can just to have it keep reporting every 6 months.
For sure.
Okay. I'm going to hit you with a couple quick ones here.
Cool.
If Zillow says my house is worth $1 million, why isn't it?
Because Zillow is an algorithm, uses algorithms. They don't use actual people to determine your house price. They gather the data from, say, a suburb, for example, like our community in Meadows and Wilsonville will be a fairly accurate Zillow pull because Zillow is pulling from the data around those 300 homes that have all sold within a certain amount of time. And most of those homes are similar size, similar bedrooms, similar baths, similar age, all that stuff. So the closer Zillow is closer to in accuracy in city neighborhoods with a lot of data to pull from than say I would say $1 million and over homes, because what they'll do generally is, at least in our area, the $1 million and above homes are generally outside, have acreage, have farm properties, they have horse barns, that some do, some don't, some have waterfront properties, and Zillow's just pulling in. They're just pulling in from a certain distance around you and saying, based on these latest home sales, this is your price. So it's just generally not accurate. It also doesn't take into account any remodel that you've done with the home, any interior work you've done, any additions that you've done, any sort of unique features that your home might have compared to others. They don't care about that. They're just pulling in data from their system and just saying what's sold near you. And that's what we think your house would cost. So it can be somewhat accurate, but most of the time it's not.
Okay. All right. We kind of talked about this one, so I won't bring it up. But what if I just move in early since the house is empty?
It's actually oddly, like, that's not a dumb question, because I think a lot of people do think, well, it's empty, can we start moving our stuff in? That's more common, is like, hey, we're 2 weeks before close, we've got to move out of our house, can we just throw our stuff in?
Sure.
And the answer is yes, you can, but it has to be in a contract. So most sellers that have moved out and the home is vacant, there's definitely an opportunity to say, hey, can we, it's called an agreement to occupy before close. Basically, it's a rental agreement before you close. And so you basically just sign documents saying, yes, the seller says, yes, you can move in before closing. And there's just terms with that.
Okay. Do open houses always bring serious buyers or just nosy neighbors?
Oh man, both. I have leaned towards, unfortunately for me, I get a lot of the nosy neighbors. Christina gets serious buyers. So I don't know if it's my personality and my bubbly personality that only gets looky-loos. But open houses do serve their purpose. It depends on the season, the time, the weekend, everything. But some agents do really well with active, serious buyers during open houses.
Okay. Last one here, and this one kind of ties into what we had talked about before, but can I ask the seller to repaint the house my favorite color before I buy it?
Yeah, for sure. Yeah, you can ask for whatever you want. The seller's most likely going to say no. But in this market, maybe they say, hey, let's split the costs, like raise the price of the house a little bit. Sure. And because if a buyer doesn't have the cash at the end of this close to do a deal, maybe the seller say, yeah, if you want it done, we'll split it, or maybe raise the cost of the house by $10K. You still can approve if you're still able to be approved for it, and we'll paint it with those, because it nets the seller the same.
Sure.
But yeah, definitely can ask.
That's an interesting, I wonder, I mean, I'm sure it's probably only ever asked or required if it's just trashed.
Yeah.
But it's an interesting,
like an aesthetic thing would be odd for a seller. Having said that, I know sellers that would be like, okay, let's see if we can work it out.
Like, let's make a deal here.
Yeah. So I just don't see why you wouldn't ask.
Right.
Yeah, I haven't had it. We had one house recently that was a unique color, but even the people bought it and then painted it. They didn't even.
Yeah.
They were like,
feels like a pretty normal thing
we'll
to
change
do.
it. So yeah.
Yeah.
But sometimes
Like
buyers don't have the cash, like, to
sure.
do things afterwards. And so then they do try to factor in, like, we want to do this. Like, the carpet's really bad. We want to do that once we close. Let's offer a little bit less, or let's ask for some closing cost credit, or various things. And that's normal.
Yeah. Yeah. Paint the house and let me keep your cat.
Yeah, exactly. Yeah, it's worth an ask.
That's the market we're in right
Worth an
now.
ask. Okay, my man. Well, this was good. Good
Yes.
talking to you. Hopefully some of these questions help people. I think some of them are pretty legit questions that people have in the lending.
Yeah,
and the real estate world.
ironically, you look at them and you hear them and you're like, they seem goofy, but
Yeah.
I think most of them are actually pretty real life questions.
For sure. Okay, guys. Until next time, we'll chat with you later, man.
All right, sounds good.
Okay, see ya.
All right, bye.